All right, we can probably go ahead and get started. And once Sean pops in, if he does, I will make him a speaker as well.
Very good. Thanks, Kelly. Welcome, everybody. We're another version of Salt's Unsalted AMA on February 1st. As Kelly mentioned, it's hard to believe we're already here, but it's good that I think we're starting to see the finish line for Celsius Refi, which we'll talk about, even though a lot of questions have come up this week. We are going to use this session to share as much information as we have about that, but also to try to explore and make sure we're understanding the facts together with the latest updates in terms of Stretto and the information that was shared yesterday. I think all of us are trying to get our arms around it and really understand it. So, we'll explore that together to hopefully add a little bit of clarity. And if not, identify the questions that are important for you and for us as a group. And then we'll do our best to go back to Celsius and through the channels that we have to see if we can get additional clarification. We will encourage people, if you have questions or can add to the conversation, please raise your hand or ask to speak. We'll bring you up to do that. And then if we cover off everything, then we have a few other topics, but we'll play that by ear today and really just focus on the Celsius Refi process and information as much as we can to begin with. Justin, to get us kicked off, I know you've been very active in a number of channels online as well as in conversations with people that are leverage or refinancing with Salt. Do you want to kick us off and give us just a little bit of an overview based on your understanding so far?
Yes, more than happy to. Hey, everybody. Hopefully, the news hasn't hit you too hard, but we're just like you. We're trying to react to the news as fast as we can and collect the data that is most pertinent to refinances, but also just in general for earned claims, etc. We're going to stay on top of this the best that we can. And as Hunter alluded to, the most important notion here is that we don't have all the answers, but we are definitely seeking to get them. And so we would love to have answers from the general crowd to see if we can't get some good questions that we can ask the debtor and forward those over to them. So hopefully get some answers from the debtor themselves, the debtor being obviously Celsius. So a few things that have happened here is that there was an effective date that was announced. We'll go over that here briefly. The the initial liquid crypto percentage amount was disclosed. There's a lot of conversation around that, obviously, because the amount of percentage is lower than what was expected. So there's some dispute over this. I know that Simon's having a webinar that had 200 guests on there, and they're going over the numbers of what that looks like, which is pretty interesting. I know that they're already maxed out though, and they're 200 for the attendance there. Then there's a discrepancy amount in terms of the excess liquidity that is coming from the debtor, which no one understands what is actually or how that should be distributed. And then on top of all that, we have the earn going first, it seems, instead of the borrowers. So class two borrowers are it seems to be taking a little bit of a backseat to the earn. So it looks like they're going to be pushing forward on the Coinbase and for US mostly PayPal, and we can get into the weeds on that in a bit. So those are a few facts that we have in front of us that we've discovered, and we're really looking forward to engagement, taking your questions, giving you the knowledge that we know, and going from there.
Justin, building on that for the people that are refining, just to restate this and see if everybody's on the same page. With that, first of all, regarding the effective date, and for everybody's information, we are still we had previously understood that the effective date would be announced and then the price set for the crypto would change depending on the date that the loan was be paid off, that your individual price would be set at noon the day your loan is paid off. Justin, have you been able to find whether that's been confirmed in the new sort of information, or is that now a question that's back up in the air a little bit?
Yeah, that's the right question to ask. The answer to that question is very simply put that we actually are back to not knowing. The effective date was tagged. I have to go look at the numbers, but it was at 42,000 like 800 I think roughly for Bitcoin. The effective date for the Ethereum was during that what you can call a quote unquote scam pump for the ETF. That's what people are referring to it as, where the Ethereum effective date was 2,500 and change. So those effective dates were announced on the 16th. We don't have any confirmation from the debtor quite yet, which I mean, obviously we're assuming that they're operationally very stretched thin at the moment with the earn going live in terms of distributions from PayPal, et cetera. So we don't know the exact behind the scenes stuff there. But all that being said, it leaves a little bit of open questions to see if we actually have the day of the refinance to be the pricing as we start to refinance our customers and creditors, and the effective date, is that really the number they're going to use for that? So that it remains to be an open question. Hopefully we can get that one flushed out relatively soon. And so that currently is the most up-to-date information we have on that, Hunter.
Okay. And then the other thing that I will restate for everybody, and then if anybody has any questions or would like to share additional thoughts or context, we'd love to have you up. So then the other implication of the announcement, Justin, sounds like it's for those that are refinancing. They'll get, when they repay off their loan, they will get 100% of the principal back with the crypto price at the date that it's determined. Plus, then it's the 57.9% of the excess collateral, correct?
Yes, that is correct. And that's a very large point of dispute right now with several people. Tony, who is not with us right now, but usually tends to join us, him and I had a conversation yesterday about this, specifically around where that amount, why that amount changed and got lowered from 68%, which is what everyone was roughly expecting, down to 57.9%. So there is, as a point of dispute, just to confirm your question, yes, that is definitely the case. And then the point of dispute moving forward is the excess 1.8 billion that people are trying to understand why they haven't, or why they're not including that in the distributions. And that's what some of the AMAs and other conversations are really around right now. So that's going to be interesting to follow that saga to see how that develops.
Okay. Yeah, and we'll be watching that, and as we get any updates either in this session or after it, we'll share it with everybody through social media channels as and when we have it. So then, Justin, I guess the last thing to touch on, and then would love to have people come up and add into the conversation, is I think you referenced, and as I understand it, Earn is going first, and this is actually now taking place. So they're actually actively paying out Earn positions based on that 57.9% distribution amount, correct?
Yes, that is absolutely correct. I highly encourage all of our customers or future customers to initiate that immediately. So get that flushed out for yourselves. There might or might not be some restrictions using PayPal. So the sooner that you do this, the better it's going to be for you. So you can get that sorted out for your earn side. There's some people who are, we'll talk about this later a little bit, but there's some people who are obviously interested in our lend investment program, and that might have some effect on them. So I highly encourage everyone to get their earn flushed out and completed prior to the refinance. And that will allow you obviously to balance out your LTV for those who are actually trying to put their earn into the LTV amount, into the collateral, to help balance out their LTV for their loans.
Excellent. Thank you, Justin. Sean, want to do a quick mic check? Do you anything you can from your conversations that you've had so far? Anything else to add?
Sean hasn't accepted the speaker request yet.
Okay, must be tech. While we wait, any questions or additional comments from everybody that's here or anyone that's here?
Yeah, absolutely. I want to encourage everyone. Like I said before, I announced this in the Telegram channel. If we have any questions that you can bring forth, good or bad, it does not matter. We'll bring those to the debtor and we'll help people facilitate those questions to get answers sooner rather than later, hopefully. And we will answer the questions the best that we can, right? I want to make sure that everyone understands that this is a fluid situation and even conversations around this are definitely welcome. So please feel free to come up.
I think we have Sean.
Yeah, nothing to add there. Go straight into AMA.
Okay. Justin, while we're waiting, what have you seen or what have been some of the questions that have come up immediately that you've been fielding or the team's been fielding in the last 24 hours?
Yeah, so yeah, let's start there. A couple of them that are pretty important are first one is everyone understanding the timeline around the refinances, like when are those going to happen? We only have estimated timelines since we don't have concrete information while the earned distributions are happening. I just want to restate this one more time. While the earned distributions are happening, there's a timeline that's going to occur in, whether it's going to be 1 week, 2 weeks, whatever that looks like. But the estimated timeline, and I confirmed this with Tony a little bit, the estimated timeline is going to be essentially after that. I'm not going to give any official information because we don't have that yet. But in terms of the rough estimated timelines, I would say within the second week of February, it seems to be maybe towards the end of the week, essentially the middle of February, which we guesstimated on our last AMA, seems to be the target for refinances. So for all the borrowers, class two, et cetera, the target right now, the estimated target without the confirmation that we have, is essentially around the middle of February right now for the refinances. So that's one major question that we've been asked repeatedly. And of course, we don't have the exact information to confirm that. However, we do have everything has come to fruition the way we had thought it would without having the best exact information at hand. So I think that theme is going to continue. So that was one big question that we get a ton of people asking us. Next one is on on the distribution amounts. We actually do have at this point clarity on what that excess collateral haircut looks like now. What that means is that we can all update our calculators, including the community calculator and our own calculator, and take the 57.9% and insert that into the haircut, as opposed to the 68% that was currently the placeholder there until we found out what they were going to reveal. Um, and then we can start getting honest calculations. So we do at least, even though it's lower than we expected and what everyone expected because of the $1.8 billion that's floating out there that needs to be flushed out and figure out why or what's happening there. Some people are speculating it's WPE and clawbacks, but that's speculation here. But now we at least have the numbers to be able to flush out exactly what it looks like, at least currently, with the debtor and Stretto announcing the numbers and how that's going to work.
That's great. Thank you, Justin. Daniel, thank you for coming up. I'd love to have you ask your question.
Hey guys, appreciate it. Yeah, I'm just trying to process this with everybody else. It feels like my loan was an ETH, and so I feel like I got evaluated on a wick candle and then got 10% less on the actual percentage. So it's got it on both sides there somehow. I don't know how that happened, but I think a lot of us are going to be rolling in with probably 70-80% LTV. Do we have some time just to shore everything up before we get the new contract with you guys? I think that would be the worst case scenario is if we're coming with that high thing and then we get wicked down on a weak candle or something. Do we have some time to recalibrate before we re-sign? Does that make sense?
Yeah, no, it does, Daniel. Just to play that back and then Sean and Justin can add in here. I think what's the window to be able to top up the collateral amount to be able to get your LTV into a range you want? As Justin was indicating, if you're being paid out on earn, then that will be great. So collect that, and especially if you've gone through the process and have set up a SALT account, then you can start consolidating collateral in your custody wallet to help with that process. The other element that we are working on confirming with Celsius is how long the refi window is going to be open. So hopefully we will hear back in the affirmative that one, the price will be set on the day the loan is paid off, and two, that there is a window of opportunity that will allow for people to gather collateral to help get loans into the LTV range that you're seeking.
And is there a step between when you guys get collateral sent to you guys? Is there any action steps, or is it just a timing thing with you and the debtor at this point? Is there
So
anything we need to do besides get shirt up with you guys?
yeah, the key step with Salt, and Justin, you can add to this, is one, get the loan documents drawn up, and two, if you're expecting to have you use collateral outside of the settlement with Celsius on your borrow with them, then move that into your custody wallet. Everything will become active on the day the refi gets paid off, and we'll look to work with you on the timing of that once we learn more information back from Celsius.
Yeah, and I just would express, Daniel, that with the new news out of the haircut being a little bit steeper than, in my opinion, it should be, I won't go into that for the moment. The clarity is that we do have the ability to even possibly stall. Obviously Sean's on this right now, so I'm speaking a little bit out of turn here, but we're at least in conversations around being able to, if your LTV is a little bit upside down or whatever because of the effective date price plus the new haircut amount coming out, then we're currently looking at solutions to either install or possibly delay that, so we have a little more time to figure out your specific situation. So I think that our C-suite would be amendable to at least having the conversation around that, and we'll go from there.
So Daniel, does that help? I know it's not as precise, I think, as we're all still trying to collect information, but I think the intention is to try to create a big a window as possible.
Yeah, definitely help. If I could just ask one more question too while
Yeah,
y'all
that'd
got
be
me
great.
here. Are we still, so I just want to make sure I understand this correctly. Like our collateral, we're not sure if that's at the price of the renegotiate, or when you guys pull the funds out, the debate is that priced at 12 o'clock that day, or was it priced at petition day, correct? We don't have that clarity yet.
That is correct. Is it at least, and I'll state it the way from the terms, is it being priced based on the effective date of January 16th, or is it going to be priced based on the noon of the day you pay off your loan? That for us is still an outstanding question.
Yeah,
Okay.
and to be
We
clear,
believe
Daniel,
it's
we
the
actually
date of the loan payoff.
go ahead, Sean, say that again. Sorry.
That's okay. I was just saying we believe it's the date of the loan payoff at noon, but we want to get confirmation in writing.
Correct. Yep. And so once we get confirmation in writing, we'll release that official information. The effective date being the 16th caught everyone by surprise. That wasn't in in terms of the communication that was happening, there was no notion that was the effective date, that the 16th was the effective date. I don't know anyone that, or anybody I spoke to, many people who knew the situation at hand, obviously, except for the people that were actually determining that. And that kind of caught almost everyone by surprise. That was the effective date, was the 16th. So that was a very interesting development there too as well. Daniel, we'll take that question and we'll take that question and put that into our pipeline to help flush it out. So feel free to reach out to as well, and I'll make sure that the answer gets back to you once we get the official answer from our team.
Yeah, because that would be, I know for myself, that would probably be a game changer if I can even refinance. Because, like I said, I was in E, so that takes another 15% off of just my collateral. So now I'm at like a 90 or 95% LTV, which just at that point I can't even work it.
Absolutely, yeah, I totally sympathize with you there. It's frustrating for us to have that happen, and just to be clear, I feel like that 1.8 billion that's floating out there is, we'll see what that looks like, and maybe it's an additional check later or something like that, or I don't know. I'm purely speculating, but the just to be clear, there might be some kind of consequence there that might be good for the creditors, but we just don't know at the point because this is obviously fresh news. So we definitely sympathize with your situation, Daniel, and we're hopeful to hopefully make you a customer of ours.
All right, appreciate it, guys. Yeah.
Very
Thanks for
good.
coming
Thanks,
up.
Daniel. Harry, it's great to have you back. Would love to have you ask your question.
Hi, no, this is just to inform Justin and Daniel. In the groups, in our Celsius groups, we knew the effective date was going to be January 16th because of the date of the 31st, Jan 31st. So I don't know why that should have come as a shock to you, because they try to coincide it with the Bitcoin ETF, from our understanding, because that would have maximized the cost of the Bitcoin, thereby lowering the actual amount of Bitcoin given to creditors. So I don't know why that came as a shock to you. Most of us already knew that play going in, whether it's Tony V, a whole bunch of, me, others, we all knew that was the play all along, because remember, it is our dollarized value on the petition date that they're going by. So if Bitcoin is trading higher on the effective date, they are literally giving us less of our assets, Bitcoin or ETH, so on and so forth. So we knew that was the play all along. I don't know who you've spoken to. If you have any more information that goes our way, that'd be great, so I could take it to my group. But from our understanding, we already had an inclination that January 31st minus 14 days was the play all along.
Thanks, Harry. I appreciate that. In terms of that, there was no like official news. Am I correct in that, or is that just like more of a?
It was a hunch by our
Yeah.
group. It was a hunch by our group that, they're going to make it January 31st minus 14 days, put on January 16th. There was another notion that was floated around that they were going to do it a week earlier to coincide with the January 10th Bitcoin ETF release date, when Bitcoin kind of did that little spike up. Because obviously, if Bitcoin's trading around 48, 49, 50K, right, as the effective date, but the petition date is July 13th, when it was around 19K. The dollarized amount, right, that we get is based off the petition date, which is the July 13th date. So if Bitcoin is valued higher, technically all the debtor, to make the creditors whole, is basically getting them the cost or close to the cost of what our petition date pricing is. Obviously, during the crypto winter, when Bitcoin was trading and all the other coins were trading at the bottom of the market. And in terms of the 1.8 billion, yeah, our groups are just trying to figure out what's going on with that. I don't know if you know about the litigation trust and all that stuff. I'm sure you do, right? Are you a creditor or not?
Me personally, no, I'm not a creditor personally, Harry.
Okay, so you're with Salt. You're with Sean, right?
Yes.
Awesome. Sounds good. Yeah. Just wanted to let you guys know that's the information that we've all been. I think if you follow Tony V, that's a good person to follow. That group puts it in there. That's one person that's been like calling it so far on the money, and now we're hopefully getting out of it. So fingers crossed we get something in 2 weeks.
Yeah, absolutely, Harry. And the one part that's going to be interesting is figuring out why the 1.8 billion is floating out there. Obviously, it's still so fresh, but that all the calculators out there were using that as a metric to include that excess, not excess, but the total estate, which is really caused a lot of issues for a lot of people, as you just heard from Daniel here a moment ago when he came up to talk. And it's going to put a lot of people closer or even near a liquidation, or and actually push some people out that were already in the 70 to 80% range for their LTVs for refinances. So I feel as though they're not really considering the borrowers heavily on that, which I feel like is a pretty unfortunate event, because a lot of people won't even be able to conduct their refinances because they just won't have enough margin between their excess and their actual principal. And then in terms of the way the principal works, on the principal amount side, if you have a really low as a creditor, if you're like 10, 20%, then obviously your LTV is better in better shape, but you get more haircut because of the 57.9%. So the haircut's a lot more dramatic since the excess it's applied to the excess collateral itself, Harry. Really super sympathetic to everyone right now. We're just trying to do the best we can to find all the information out. And I really thank you for coming up and stating that. But yeah, we try to work off official information too for Salt, on Salt's behalf. And sometimes we can't really speculate too much because we don't want to, mislead people too as well. But yeah, I see what you're saying. I follow the logic and it makes a lot of sense. So yeah, thank you for coming up and speaking.
I do have a question, but Sean just left. Are you guys going to be offering other stuff other than just loans, like in the near future? I know Sean have been talking on the back channel for that. And maybe Hunter can, or you
Yeah,
have.
Harry, that's a great question. Let me give you a little bit of an overview of what we have, and then we're happy to address other questions on this. But yes, we've announced on previous AMAs that we do have a lend product, which lend program that allows customers to basically match up USDC and USDT at the moment with our over collateralized loans, so that you can earn a return on that crypto. And we'll be looking to build that out and expand, and also very interested in other things that the community is interested in and that would be helpful in terms of managing your crypto assets the way you would like to.
I would love for you guys to have that. Like I said, I've spoken to Sean about this, I think a year ago, and I know you have a lot on your plate right now with handling all these loans coming out of Celsius and so on and so forth. But yeah, someplace like an exchange type platform or custodial type, other than Coinbase, would definitely. I personally would definitely be interested in it.
So be curious, Harry, what would be some of the key characteristics of that product or service that would really interest you?
Okay, I'm gonna break it down for you. A lot of us are now very wary about handing over crypto to kind of centralized organizations. From my talking with Sean, we've been given more reassurances. Obviously, this has to be all verified, right? Because now all of us are in this. But the thing that I would like to see is a custodial service, staking, or some type of base exchange, if you will, where we could swap from token to token. Basically, also onboarding a fiat on and off ramp without the high fees that Coinbase charges for such transactions. A lot of us that have come onto this crypto landscape have used Coinbase. I've also used myself Kraken. I think Kraken's a great platform. But with the current filings and lawsuits with Kraken, it has put some of us in the US at unease. So we've gone back to our cold wallets. So if Salt, that has already gone through this SEC lawsuit, have come out of it, are providing loan services, are providing custodial services, are providing staking services, and are providing exchange services, swapping tokens in and out, and we can verify that you are indeed having over collateralized loans and the company is making money and the company is secure. Hopefully you guys have a treasury set up so that way in case of massive crypto downturns, winters, crashes, you guys don't go insolvent or into another bankruptcy is what I'm personally looking at.
No, that's great. That's great, Harry. Really appreciate the feedback, and I'll let Justin add a little bit more on the lens side, just in terms of the product offering. But we do have a number of things that are in the works to help deliver and address a lot of the points that you brought up. I think one of the things in particular, from a stability perspective, the stabilizations will continue to remain core in terms of not only Salt ensuring that there is the capital in the business that is needed to buy back collateral, pay back what is owed, but also protect the wealth and the value of your assets as a customer. But we are looking to improve and add on the custody options, as you mentioned, to help build out both the suite on the borrow side as well as on the lend side.
Yeah, absolutely. And Harry, that was great information. I've been hearing quite a bit around that from multiple customers who actually are interested in the lend product that we have. So we recently uh, we just announced and then we have launched essentially our lend USDC/USDT, so our stablecoin lend that currently right now it seems to be that 8% is an attractive target for all of the customers that were interested in that. So we're seeing some traction on that already. The lend is separate from the borrow in the fact that they are conducted separately. Lend is also accredited investments right now. So we believe strongly after going through the SEC motion several years ago and whatnot, that we've learned a lot. We're taking those learnings and applying it. And the fact that we have not only survived, but thrived now to this point, and we're the really, I would say at least we're trying to represent being the best actor in the space in the US. There's not a lot of US institutions that will do retail loans anymore. In fact, I'm not quite sure because I know that Unchained pulled out for retail lending and others. And so we're trying to make sure that we're trying to make sure that as a whole, holistically, that we are doing everything with our T's crossed and I's dotted. And I feel personally that we're doing just that. So I feel very confident in us allowing accredited investors to begin starting the lend investment or initiating with the lend investment program. And we do have traction that's we're seeing from there. And that is the proper way to do it. People will have attestations. They will verify that they are accredited investors first, have the paperwork documented properly for the SEC, et cetera. And unlike Celsius, for example, who was just taking on their earn program, they were just saying, okay, are you a accredited investor? Okay, great. There's a lot of retail customers who actually had earn, and that's a whole nother page that we won't turn over right now and read into, but that was, in our opinion, that's the improper way to do it. So the proper way to do it right now currently is going to be accredited investor, and then going through going through those stages first, and then opening up the product. Maybe we can do ETH, maybe we can do Bitcoin in the future as a lend investment opportunity. I'm getting some feedback on that. So we're very excited about offering that and doing it the right way, Harry. That's the most important notion here, is that we actually conduct this in the correct manner where it protects both consumers, customers, and Salt, and everything is papered correctly, unlike some of the other things that have occurred recently. So thank you very much, Hay, for that.
So, yeah, one final thing. A lot of us have taken a sizable hit because of what's happened at Celsius, me included. What happens if you are non-accredited? What happens if you're just a retail customer? What does Salt Lending provide to those former Celsius creditors and other retail customers in general? People coming out of FTX, people coming out of other or newbies coming into this crypto space. Does Salt offer anything to retail customers?
On
Go ahead.
on the lens side, Harry, at this point, we're limited, at least in the US, to accredited investors. Now, globally, that designation does not apply, but we are working within sort of the jurisdictions we operate in to be able to open up the lend product as a full retail product, but we still have some hurdles that we have to get over to be able to do that.
Yeah, and to add just a little bit to that, so if you're outside the US, then let's have a conversation ultimately, because it might make sense as long as you're not in an ineligible jurisdiction with it, as Hunter said earlier, where alluding to, if we work within that jurisdiction and we can take funds in via those eligible jurisdictions, then we're more than happy to have the conversation and possibly do a lend investment with you.
And what about the borrow?
Well, the borrow is a retail product. Yeah.
Yeah. And in terms of custodial services, how's that? If you have a retail customer that may not be comfortable in securing or holding their private keys, are there any offerings from Salt regarding that?
So we don't have any straight up custodial services today. We partner with Fireblocks, and we have conversations with a number of other groups that are interested in having us partner with them on custodial services and tri-party agreements. We are working towards that to provide integrated options with both the lend and borrow services, and then potentially custody independently.
Yeah, and I'll just add on to that, Harry. So I'm always the FOMO guy because it's just who I am inherently. But stay tuned, because we have these. You asked earlier, and circling back to that main question, Harry, was what does the roadmap look like? we definitely have demand for custody product again. We didn't used to. We ran this quite a few years ago, cold storage. It wasn't very attractive. A lot of people didn't actually necessarily even buy into it. But now obviously everyone's with their learnings, the demand has changed. So we're looking at that again heavily, and stay tuned because we could have several custody solutions, and it's probably I can't give a time frame on it, but ultimately it's probably going to happen if I had to say so myself. So we'll see how that pans out, but stay tuned, and we will definitely be looking at lots of custody solutions for several different methodologies, including Lend possibly.
And one final note, would it be possible that you provide a custodial solution that allows the retail customer ability to access their custodial crypto in the event that SALT may cease to exist? The custodial customer still has access to their crypto funds. Is that part of your design for that
Yeah,
roadmap?
we are looking at solutions, Harry, that would provide that, and for us to understand how we, I think consistent with what we've been striving to do around the Celsius refi and really be an advocate and a protector of the ecosystem's wealth and your wealth and assets. We are looking at how to create a custody solution that is bankruptcy remote and provides that level of third party protection from the counterparty risk issue.
Yep, we definitely are. And to add on to that, it's always the balance between interest rates, right? People who want cheaper interest rates with a custody solution such as that, it costs more, right? In general, the exact amount, of course, determines on the situation, et cetera. But if there's a demand for that, we're more than happy to provide it. We've actually stated that several months ago to a lot of the Celsius creditors. We found out that most of them were just trying to survive and bridge the gap. So there wasn't a lot of demand initially, but towards the end here in the past month or so, there has been some demand on the custodial part of things. So now that we have some demand, we're looking into it heavily on our roadmap right now and trying to figure out exactly where we can fit that in our product development.
Thank you very much. Yeah, that's good to know. It's just, I look out for my own little community that's part of Celsius. And that's something that going forward, a lot of us are very hesitant to once again relinquish our crypto to centralized organizations. But if there is a custodial product in which there is a alternate method to be able for the retail customer creditor to access their crypto in the event that a company fails, I think that is a product that a lot of people can feel comfortable with going into it, because it adds that security that, hey, even if the company fails, you still have access to your crypto. Because we all saw what happened when the pause happened with Celsius. There were a lot of transactions and quote unquote payoffs and liquidations during that freeze period. And then obviously the devastating news of the bankruptcy that hit on July 13th. So we're trying to, at least my little group of creditors would not be forthright or would not be too eager to go to another platform in which there's no kind of those security safeguards, in which they have access to their um, assets, their crypto assets from a centralized
Yep, Harry,
source.
thank you for that. And one thing I want to make sure I mention is I want to make sure that we're clear, like on the swim lanes of what is really the actual underlying issue. The largest underlying issue is that these funds are misappropriated, right? For Celsius. And yes, custody probably would have, as long as the custody would have been what I think what they call like a true sense of perfected collateral, I think is what they refer to as. Someone correct me if I'm wrong on that, but essentially, if all parties, including the custody provider, are to disintegrate, if they were ceasing to exist, that'd be the lender, the custody provider, and the bar, and the other lender on the other side. If there's another lender, typically most lending providers on the retail have an institutional lender, et cetera, or a fund, or et cetera, to lend from. If all three were to go away, then that really is the ultimate solution. But that does have a cost to it associated. And for Celsius, those funds are misappropriated and used for other things that were then re-leveraged. And then that to me is the standout issue, is that a company's worth is really how long it's been in business for and what it does in its practices. And custody is a good solution. You're right about that. And a lot of people will feel comfortable with that. But at the end of the day, if a company isn't misappropriating or re-leveraging things in risky schemes, or going out and buying $700 million worth of miners essentially, and then forcing everyone in through bankruptcy to take a mining co-stock that some people do and don't want, those are the things that are that really are at the front of the discussion beyond just the custody. But what you're saying is absolutely correct. There is demand for that now, and so we're seeking that. But I just want to make sure we didn't lose the point that the biggest reason why this happened is because the liquidity wasn't there, because the money was spent of the collateral for that was supposed to be there, over collateralizing their loans. So that is, I just want to make sure that was at the forefront of the conversation, because that's what ended up happening. Who knows what would have happened if they wouldn't have releveraged or essentially not misappropriated the fund customers' funds on the over collateralization part. So that would be that's another conversation for another day. But very good information, Harry, and we are heavily looking into this, and we're more than happy to, especially with us speaking. We just have one more person that is definitely interested in this product. So thank you so much for your time.
Yeah, Harry, thanks for coming up. While we wait for others that might have a question, I want to address. We got a couple questions through X from Saxman. The first one being that to confirm that when Salt pays off the loan to Celsius, all of the collateral comes back to Salt. And that is accurate. So when Salt settles the outstanding balance on anybody that's refining, both the principal and the excess collateral will be transferred from Celsius to Salt. And then that will create the collateral against your loan and will activate the agreement. And then, Saxman, your second question was then around regarding payouts. You can have, if you have an earn account and you want to use a BTC or an ETH custody wallet and at Salt to direct your payment, you can do that. So if people are trying to bypass, I don't think you can bypass the PayPal or Coinbase options in terms of the earn, but you can then move it from there, depending on your jurisdiction, into your Salt custody account. Justin, is that your understanding as well?
Yes, that is correct. That is the understanding there. And we earlier in the show, or the AMA, excuse me, we had discussed briefly about just getting that solved as soon as possible. We highly encourage all of our future customers and the creditors of Celsius to get that done as soon as humanly possible. There might or might not be restrictions around the PayPal side. We've heard a rumor of a $10,000 a week provision on the PayPal side. The sooner the better for all of you. We are obviously still working to talk with the debtor and see if we can't concurrently get those both over. But with the new announcement yesterday of them essentially starting to process the earn, we haven't heard back yet from the debtor on this specific topic after we had several questions and inquiries into this. So I wouldn't count on that to happen. And I would say it's really important that you get that done as soon as possible. That way, in the case that it doesn't happen, you're not stuck with having to wait even longer. And so that's, we wouldn't want any of our customers and the creditors of Celsius to be in that situation. So get it done as soon as you can.
Great. Thanks, Justin. All right, Santiago, I would love to have you ask your question.
No, hey guys, I want to be super sensitive to everyone's time. I'm sorry, my bad. Life's going on over here, so I jumped on late. And so I know that sometimes you guys do like a high level recap right now. I know I'm sure that a lot of you people went over it. If you could do a little like a 20-second, like high level, is there anything noteworthy, anything new, kind of high level that I might have missed at the beginning?
Yep, Santiago, more than happy to. So very specifically speaking, the effective date is the 16th. There was a price pegged to the effective date. It's 2,500 and change for Ethereum. It's 4,000 or 42,000 and I think 800 and change for Bitcoin. I have to go look at the numbers. The effective date was 15 days behind yesterday, so, or 14 days, I guess you could technically say. So that is in effect currently as of yesterday. The earn is going to go first. The earn is essentially, they're doing distributions right now for the earn, which is going to be around using Coinbase and or PayPal. It sounds like PayPal is going to be the main methodology for the US. So if you have earn, get on top of that as soon as possible to start receiving your distributions. The next one is the haircut is a little worse than we had anticipated. There's some dispute over that. So I wouldn't say that the story's over yet, but as of right now, in terms of the actual math, it's 57.9% is the haircut for the excess or excess collateral or the earn, depending on which type of classification you have. And then the refinance looks to be roughly anywhere between 1.5 to 2.5 weeks from now, depending on how everything flushes out. And we're seeking guidance from the debtor. They just haven't gotten back to us like they usually have. They've usually been really good to work with in general in terms of response time. But I can sense that there's definitely a lot of operational bandwidth issues going on because of the earned distributions going on concurrently. So we're trying to get answers out of that specifically. So that's the high level, Santiago, all the new news that's come out.
Thank you so much. And just super fast, and is everything cleared up or in compliance or kosher with California refis or California borrowers?
Yep. So
Santiago, we are still actively working with them, and as we stated last week, do expect to be able to service the refis within California based on our conversations with the regulators so far.
Yeah, keyword is expect there.
Okay. All right. Thank you, guys.
And Saxman, will have you up to ask your question, but real quickly, I want to address a question that Grizzly had messaged in was around, can we do loans against the equity or something like that? And unfortunately, at this point, SALT only provides collateralized loans against crypto assets. So we unfortunately will not be able to lend against any equity. Saxman, would love to have you come up and ask your question.
Okay. Hey, thanks for addressing my questions. This is a follow-up. I'm a unique situation because I'm in Hawaii and the crypto laws here are very restrictive. I cannot receive unless they change something that I don't know about. But it's a Venmo and PayPal, and we're not allowed to have a Coinbase account. But the PayPal and Venmo, we're not allowed to transfer any crypto. So my question was, because I do have Earn, and I had, can I have Celsius just transfer directly to SALT, whatever I had in my Earn account, and then I can hold that for additional collateral?
My
Do you
understanding
think
is,
that's possible?
and Justin, weigh in here if more on this than myself, is if because of your jurisdiction, Celsius is giving you the opportunity to specify a different address for your payout, then you could use your SALT custody address as the destination. But that's going to end up being a question for Celsius if you are not able to have either a PayPal or Coinbase account.
Yeah, that's a great question, Saxman. So let me just be specific about this. So what Hunter said is correct. However, we do need to receive clarification for that. So I'm going to, just like earlier, I took a question, I think it was from Daniel. I'm going to put that in our little depository here, and I'm going to ask that question specifically on behalf of you and others in your situation to make sure we get that question answered for you. So in terms of, yeah,
Great.
absolutely. So we'll get that question sent over to the debtor ASAP. And yeah, this is what this AMA is all about. It's about, we don't know everything, but at least we know what we do know. And the things that we don't know, let's collect those questions and forward them to the debtor and get a question back, a question answered as soon as possible.
Thank you so much. And yesterday I did sign the SALT doc for my loan that I'm transferring over. I had 3 loans with Celsius, and each one had a 25% LTV. So the one that I signed yesterday is a 50% LTV. I'm just hoping that there will be enough collateral that I don't have to put any more. But I would like to, like I said, send whatever earn I had in that account over as well. Thanks for your time.
Oh, thank you.
Yep. Yeah, it's actually good stuff there. I'll speak to loan ops about this, but there is, yeah, with the additional haircut, which is effectively roughly 10% in terms of difference what we were expecting. We'll have a discussion around what the 50% LTV and belows can possibly do, especially with the earn, with you being in lock grid with your earn. So I'll get to those questions and get them back to you. Feel free to reach out though to me in Telegram or in sales@saltlending.com. And that way I can get you in the queue, make sure that your question isn't lost in the shuffle. Thanks, Saxman.
Okay, so I can connect with you through the sales at Salt.
Yep, sales at saltlending.com. That's correct.
Great. Okay, thank you, Justin.
No problem.
We'll make one last call for any other questions. Otherwise, we will conclude this. We greatly appreciate everybody's participation today. I would look forward to these sort of every week to be able to explore interesting topics, but most importantly, make sure we can address any of the questions that you have, either regarding the overall space or the products, and in this case, the Celsius refinancing. Kelly, is anybody waiting just to make sure we don't miss anyone?
Nope, we have no one in the queue.
Okay. We'll call this a wrap. Thanks again, everybody, for coming, your ongoing support and participation in the wider system. And until next week, stay long, stay liquid, and stay salty. Thank you, everyone.